The tangible governance token has been up only since the beginning of the year, and they've done so by buying real estate properties in London. How did they do this? I'll explain everything you need to know about the tangible token in this video. So Tangible aims to be the world's first inflation-resistant stablecoin backed by real estate. This is called USDR, or Real USD. Its TVL has been grinding up since the beginning of the year, and the market cap of USDR is currently sitting at $53 million. 46% of that is backed by real estate. This project is really interesting to me because if you listen to popular gurus like Ray Dalio, he's often mentioned that he's not bullish Bitcoin because it's way too volatile as a store of value. However, he is very bullish this idea of an inflation-resistant stablecoin. And what better hedge against inflation than real estate? Real estate tends to appreciate in value over time, and it also has the benefit of generating rental income that can be paid as a form of dividend. And this is what USDR is trying to do, right? So with the dollars backing USDR, they're buying real estate, and the rent collected from the rental properties is distributed daily in the form of a native rebase. And as the value of real estate in the treasury increases over time, so does the yield. So can this actually be a scalable form of an inflation-resistant stablecoin? Only time will tell, but so far, so good. But how do they achieve this? This is where the power of tokenomics and incentives really kick in. If you go to this page, you see that the current yield for USDR is 18.2%, 7.6% paid from rental income, and 10.6% in the governance token, right? So these are inflationary token rewards. And from a farming perspective, this could be pretty attractive because what you can do is go to the tangible application on Polygon, take DAI and mint USDR 1-to-1. And by simply holding USDR in your wallet, you get paid 18%, right? 8% from rental income and 10% from the token emissions. And as more and more demand for the stablecoin yield grows, so does the backing of USDR. And the team just goes ahead and takes the dollars that, that backs USDR and buys rental properties with it. And I mean, it could be interesting, right, from a stablecoin farming perspective, but I know you have this question of is this really scalable? I mean, so far it's working, great, but what happens if the token goes down? I mean, if the token price is going up, it's good because I mean it's paid in the APY is paid in the token, so it's going to incentivize more people to mint it. But it could be reflexive on the downside because if you look at the documentation, their goal is to eventually have 50 to 80% of USDR backed by real estate. The current number is 46%, but they want to be more capital efficient over time by increasing the backing of real estate and lowering its dependency on DAI. The docs do say that they want it to be fractionally backed by tangible, but I think the team understands that this is not really scalable. It might have bring some regulation risk, and if you look at the current backing, USDR is 133% backed, over collateralized, and the 32% of the over collateralization is tangible, which I mean, I guess it works right now, but I mean, this can create another Luna USD situation if this gets too big. So far it looks like this, but I mean, it's only, it's only $53 million market cap. It's pretty small in the grand scheme of things, and yeah, I mean, there's a risk where there's $24 million worth of illiquid real estate. What if everyone wants to redeem all at once? These risks were brought upon by this website called cryptorisks.substack.com. I'll link this in the description below. And they highlighted some risks that's pretty obvious, right? Centralization aspects, right? Because the team is literally buying real estate. So you're kind of dependent on them picking the right properties that would appreciate in value with sustainable rental demand. Real estate is illiquid, so if everyone wants to redeem all at once, then they can't just sell real estate instantly. They can't market sell it, right? There's going to be a process. So if everyone's heading for the exits, then USDR might trade at a discount, let's say 90 cents, which might eat into all of the farming income. The tangible price is reflexive. So if people are just minting USDR to farm tangible and the tangible price goes down, then maybe there's going to be less demand to hold it. And then, you can run into the whole illiquidity risk. And then there's regulation, do people, or does the government want this type of project to get too big? I mean, so far it's doing it's doing well, and I do think that a project like this is gonna get big in the future, but maybe it's too early, so there's risks there. But let's talk about other growth drivers because it's not just a real estate coin, right? An inflation resistant real estate coin. It also tries to tokenize real world assets and has a marketplace where people can trade them. By going to the marketplace, you can buy gold bars or wine bottles. How exactly does this work? So how it works, if you wanted to buy a wine bottle, for example, you can buy it using USDR. So it's also trying to be a medium of exchange. And then by doing so, you get this TNFT, tangible NFT. And if you actually want physical delivery of the product, then you burn this NFT through like tangible custody, and they will eventually ship it to you. They also have like watches. They actually have like hundreds of watches and like hundreds of wine bottles. I can't really see myself using this, but I guess like I'm not really like a watch or wine person. But like if you're bullish this idea, I definitely think that the token can also have some value accrual because they take a 2.5% fee. A third of that goes to token buybacks, and then 2/3 of that goes to tangible lockers. And let's pivot into the valuation framework because I mean it's all cool, but like how do you actually buy this thing, because it's been up only, right? It's kind of hard to buy. If you go to CoinGecko, there's no circulating market cap or circulating supply. I actually dug inside the Discord and found that, according to Mike, who's on the team, back in May, so a couple months ago, he mentioned that the circulating is roughly 20% of the total supply. Actually, like all of the supply is actually like circulating, so like, there's like no vesting. But if you actually go to like this 3/3 NFT thing, 98% of the tokens are locked for an average period of 1,400 days. I think this is mostly the team. So I think most of the teams like locked it for 4 years, and they take 2/3 of the marketplace fees. I also know that there's some tangible token inflation that goes to these lockers. I couldn't really find metrics, or the documentation didn't really explain that part that well to me. So I'm not sure how many tokens are going to the team through inflation, because yes, I mean they all lock to the tokens, but if they get some emissions that they can potentially sell, but if we take the 98% locked at face value, we can say, hey, like the current circulating market cap is 6 million because only 2% of the total supply is out right now, and that could potentially explain the price action. I mean, there's no tokens out there, so it doesn't really take that much to move price, and I guess no one's selling because people just want exposure to this type of asset. FDV is 316, so it's pretty high, but I guess if you care about the circulating market cap, and if you think that most of the supply is locked for 4 years, then maybe there could be a supply crunch generally. So tangible, right? The token itself could be a good way to gain exposure to a general marketplace for real world assets. Right now they only have gold bars, wine, and watches, but I'm sure that they're going to list more assets over time. It can be a way to bet on the growth of the tokenized real estate space and this narrative behind this inflation resistant stablecoin. I think there's merits of looking into this project. There's merits just farming it outright, right? You can take DAI, mint USDR with it on Polygon, so the gas fees are pretty cheap, and then farm tangible at a 10% rate. That could be a lower risk way to gain exposure, but you also have to be aware of the risks, because if there's a mass exit event, you might not be able to exit your USDR 1-to-1. So let's go over some summaries and takeaways on why this project is really, really interesting to me. So from a tokenomics perspective, I think this is only something that can be done in Web3 and crypto, where they use tangible token emissions to bootstrap growth of their stablecoin, and they used the backing, using token emissions to buy real estate, and then create value for holders of USDR. And even though the token's up only, I still think it's in the relatively early stages of growth, which does mean it's pretty high risk. But I think I laid out the risks earlier. And when it comes to real world assets, it's for me as a content creator, I guess one benefit that I have is I get insight in retail interest in crypto, and I have a primarily DeFi focused channel, and I understand that interest and hype around DeFi has waned a lot in the past year, and year to date, every time I upload a video I lose subscribers, which is totally understandable, and even with the recent XRP case, right, XRP not being a security, I thought that would bring more interest back into crypto and altcoins, but that simply has not happened. So we still are in this PvP phase where not much new money is coming into the space. And it's not just me. Benjamin Cohen, he shared this chart where he looked at the bigger channels like BitBoy, Coin Bureau, Altcoin. I mean all these channels, and I guess viewership has not really increased despite prices going up throughout most of 2023. And tying this back into the real world asset sector, I think it's interesting because I feel most other sectors in crypto is PvP, and there's a bunch of like high fees associated with it, so it's mostly a negative sum game. But when it comes to real world assets, where these crypto projects are buying assets generating actual revenue and income from things that actually like exist, right? Tangible things that exist in the real world, that can actually create for a positive sum game, right? Because with the rental income, that's directly flowing into token holders, and it's not purely from token inflation. And if the value of real estate is appreciating, then so does the backing of USDR. So I feel like the RWA sector can actually decouple from the rest of markets because its revenues are not directly tied to crypto native economic activity, right? Value derived from non-crypto sources. And this is like one of the reasons why I like Maker. When we dropped the research report back on July 10th, we noticed that, hey, like Maker owns a bunch of UST bills, and they're using the interest payments from the UST bills to buy back their token, which, I mean, can create for like a PvE game, right? A player versus environment scenario, because like when you're trading crypto tokens, like who's the counterparty? It's like other degens, like you, myself, and your friends. But if interest payments are coming from the government or rental income, then it's not purely PvP, because I mean the counterparty is partially like the government, right? Or like rental people that rent property. I mean, of course, it is always PvP in some sense. People are trying to extract value from each other, but I also think that when in its current environment, when crypto is so zero sum, looking for positive sum games is very, very interesting to me. And I'm spending more and more time into the real world asset space because I do think that it can create these types of games. So, tangible token, literally up only. I actually own 0 because when I first saw it like a few months ago, I was like, cool idea, but it can't really scale. Like, what if it gets to like 500 million market cap and then people try to redeem, and then it kind of creates like this whole like panic like exit scenario. But obviously I am coping, right? Price is up only because most of the team tokens are locked. Like the float is very low. If it's actually like a 6 million like circulating supply, then yeah, like it doesn't take that much buy pressure to double, triple, quadruple the price. But I guess also, right, it doesn't take that much sell pressure to drive price lower. So I'm just sharing this video because I think the real world asset sector is really interesting. They're one of the few projects that, or Tangible is one of the few projects that actually like has real estate backing it. But I also think that at some point, like FDV is going to matter. Like even if like the circulating supply is like, or circulating market cap is very low, if the FDV is ridiculous, then it's going to be hard for new buyers to step in. So I'm just monitoring the growth of the stablecoin. I'm also monitoring, I guess, like how London, I mean, I'm not really like a real estate expert, but I also think it's interesting that, there's team, it's like buying stuff in London. And there's concerns around the current scalability of the current model, like partially backed by real estate and whatnot. But, I think that's not to discount anything from the team. I think they've done an incredible job executing on like buying real estate. So far, like no one has like lost money, right? And the system has worked. Like they already have like gold bars, wine bottles, like watches that people can buy. So, I mean, I think compared to like other crypto projects, they're actually trying to create positive value to the space. And, they've done a successful job. So, I really am, like looking forward to where they go from here. And it's definitely something that I have on my watch list. For more research on DeFi, crypto, NFTs, real world assets, feel free to follow HFA Research on Twitter. We have our free newsletter we post every single day. It's all going to be free. But if you do want to level up your research and gain more premium content, check out the premium Discord. I post 3 premium videos every single week, and you also get access to a community, right, of a few hundred DeFi humble farmers, always trying to be on the cutting edge of new trends in DeFi and overall crypto. So thank you guys for watching. See you guys later, and check out Tangible. I think it's a really cool product. Bye-bye.